Hey traders, I hope you're all doing well. So right here, let's quickly jump on to our analysis with natural gas. I'm going to go through gold, silver, and crude oil as well. Before I start my analysis, let's connect with our last video. Let me show you what I've said in my previous video so that we can take it from there. Let me give you a sell condition on the 4-hour time frame. So on the 4-hour time frame, if we have a push up like this, just mark your rejection zone right here. So this is your rejection zone, and if we get a push up and then we have an engulfing candle, big engulfing candle on the 4-hour time frame, then that will be a strong signal that the market will push down. Okay, right here, what do we have? As per my yesterday's video, yes, we had this rejection zone, and as you can see, the double top is still intact on the 4-hour time frame as mentioned, even on the 1-hour time frame as well, and market ended up falling down. But we did not get an opportunity to enter here because of this big impulsive move. Now I did enter this trade yesterday using one of my strategy which I not normally use here on the YouTube. That's a different strategy, guys, so don't worry about that. But here you can see it's a heartbreaker for me. Market hit my stop loss before it pushes down, but that's totally fine. I have got some other good trades and that covers my loss, but that's fine. That happens in trading. So now what to expect? As you can see, the market has pushed down from our rejection zone as expected. So now when I see this type of impulsive move, it is a valid double top, but I won't enter like this, something like this. I won't enter like this because of this impulsive move. Now this candle is still running, and if we have a push up of this candle, and if let's say if this candle closes here, yes, in that case I will enter my short trade right here. Or the other way of entering the short trade is using a Fibonacci tool, same like yesterday I've shown you. So for the Fibonacci tool, from the lowest wick of your candle, pull it up to the highest wick of the candle. So now this is the 50% retracement, which is your pullback zone as well, and which is 9.3032. So at this point, we want to see a retest of 50% retracement with a bearish engulfing candle to take our short trades with our ATR as a target. So at this point, market is now bearish. On a lower time frame is still bullish on the larger time frame. Let me show you what I mean by that. On daily time frame, here you can see every time the market gave us this engulfing pattern, and every time it happens on our major zones, market pushes down. Then after a push down, we have a push up in a trend using this 20 EMA as a support. And then you can see we have this engulfing candle, market pushes down, hit 50 EMA and continue its trend. Right here we had this inverted hammer or a pin bar, market pushes down from the major zone and then it pushes up. So now on the lower time frame, let me clear this mess here. So what do you see here now? Market has pushed up, formed this engulfing candle. This is not an engulfing here on the currency.com, but if you see at the Owanda, we do have this green candle. Previous candle is a green candle, and then we have a red candle. So I'll take it as an engulfing candle because I trade on Owanda, these commodities, and I have a small account with them. So looking at that with this engulfing candle, if we have a close here, then if you look at the ATR is coming up as 61 high volatility, and according to that, on a larger time frame, we can expect a push down to 8.025, and it can still go down to 50 EMA, which is 7.6272 before we can get another push up. The market is in a bearish mode. Let me give you the conditions on 4-hour time frame. So at this point, if we have a push up here and the market closes here somewhere above, you can take your short trades, something like this, and hover over this candle and you will see the ATR. ATR, whatever the ATR, you can take your targets. And with that, we have a bearish divergence, which is something like this. Market is making higher highs and RSI is making lower highs. I know it's hard to see if it's a divergence or not, but let me give you a very good way to see if it's a divergence or not. So at the top of the RSI, you can see the value right here. Just bring your cursor here. You see the value is coming up at 71.86, and now take it to the next stop. The value is 71.22, which is the lower value, means we have a divergence in the RSI as well, which is also a bearish sign. And if you look back on the daily time frame, we have a clean divergence. So if we have a close here, then it can hit the targets I've just mentioned to you before. We can get a hit of 50 EMA as well before the market pushes up again. So look for bearish trade only at this point, the way I have said. As you can see, the candle is now closed, and at this point you can expect a pullback from 8.997 till 9.053. So this is the pullback zone. It might not give you a pullback and it can still fall, but technically this is the pullback zone I'm expecting. And looking at the technicals, we can expect a push up to 50 EMA or this zone, as this zone has now turned into resistance, which was previously a support, before we can see another push down. So that was a quick one on natural gas. Okay, guys, right here on Oanda, it's a same and similar condition. Just go back and check the currency.com analysis. Everything is same. There's no difference. We have same condition here other than the numbers. So I'm not going to go through all the analysis on Oanda here. Let me just give you the numbers. And if you pull up your Fibonacci here, you can now expect a push up to 50% retracement, which is now 8.972. And this is the previous support that can turn now into resistance, and we can expect a retest of this zone before we can see a push down. Other than that, everything is same. Right here, let's check gold. So what do we have here? Gold, we have a similar condition. Market still pushing up. We have a pullback. We have an engulfing candle. Not an engulfing candle. This is a previous candle. It's a green candle. So we have a bullish candle, I would say. And now market is pushing up. We can expect a push down, retest again before we can see further push up. Still bullish, not selling at this point. Let's check silver. So silver is now still at the support. You want to see a breakout above this. If we have a breakout above 22.456, then you can see a push down and we can see market to hit 23.060. This is a zone from where I will look for my selling trade, either as an engulfer or double top entry pattern. So silver is still above the support. You want to see a breakout, make sure we have a complete confirmation of an uptrend. As you can see, market is making higher highs, breaking above the previous high. So want to see again the break above this high. Right here on crude oil, we did have a nice push up as mentioned yesterday. I took this trade and I've also sent this trade to my priority members. I'm not sure if your stop loss is hit. Mine was not hit. I have recorded this trade live as well, which I will show you over the weekend. It depends on your spread and broker. As you can see, I have still had a room of around 14 pips, and the spread here I have is 3. So that is why my stop loss was not hit. So now it's still bullish. Pull up your Fibonacci at this point. Let me give you the points. The reason I want to see a pullback is once the market gives us an impulsive move, it always takes a breather, which can be a 50% retracement or a few candles pullback. That is why I always have my Fibonacci tool there to check the pullback zones. Right here. So now expect a pullback to this buffer zone, which is 122.9 122.928, that goes down to 122.406. So this is the zone you want to look for a buy entry, a limit order as an aggressive way to enter, or if you want to be less aggressive, I normally enter in a very less aggressive way, especially for commodities. I do enter aggressively on forex as I am a forex trader and I have tested all the pairs, mostly all the pairs in forex, but I have not tested commodities for this strategy. So the less aggressive way to enter with an engulfing candle, then you can take your long trades and the next target will be 125.33, where you can exit your trades, and I will update you accordingly what to expect next. So that's all for commodity market, guys. Any questions, buzz me on Instagram. I'll get back to you ASAP. Hope you trade green. I'll see you guys in the next video. Till then, take care.